Hey everyone, welcome to a very special St. Patrick's Day market update on March 17th, 2023. And we've got a lot to talk about this month, so we're going to get right to it. But if you would take just a second to smash the like button and click subscribe, I'd really appreciate it. It doesn't cost you anything and it helps me out a lot. Now let's get into it. We'll start with the thing on everybody's mind this week, and that's the collapse of Silicon Valley Bank last weekend. And while it seems that things have mostly settled out or are under control now, it did cause a frenzy in the stock market, and it caused mortgage rates to drop significantly on Monday before bouncing up in the middle of the week and settling out around 6.55% at the end of the week. On a good note though, the 10-year Treasury notes have continued falling since the start of the month and are down almost 0.5%, which could indicate that we've got lower mortgage rates coming in the future. The jobs report was released last Friday, and it was strong, showing that inflation may be slowing, but it was largely overshadowed by the banking industry turmoil. Consumer price index numbers were in line with expectations, increasing 0.4% for the month and putting the annual inflation rate at 6%. While the banking industry failures are not a good thing by any means, it does show that the Federal Reserve's efforts to slow inflation and get the economy under control are working. And that, along with a strong jobs report and CPI numbers in line with expectations, leaves many to believe that they will raise rates by only 25 basis points at their meeting next week. Builder sentiment, which gauges home builder perceptions of the single-family housing sales expectations for the next 6 months, rose again for the third straight month in a report released on March 15th. It's now at 44 points, but that's well below the 79 points that we saw in March of last year. This means that while builders still have a slightly negative outlook, they are becoming increasingly confident in the housing market and could indicate that we're going to have another strong summer. Apartment and multifamily housing construction are at near 40-year highs in response to solid rent growth and low vacancy rates. But with such active construction, it's likely that we'll see many empty units hitting the market this year and next, which will lead to calmer rents. Single-family home construction, on the other hand, is more restrained, with only 830,000 units started, well below the 1 million unit historical average. And once rents, consumer price inflation, and mortgage rates calm down, many people wonder if there will be enough single-family homes to meet buyer demand. There is great news for home buyers looking to use an FHA mortgage. On February 22nd, the Department of Housing and Urban Development announced that they'll be decreasing the mortgage insurance premium rate by 30 basis points. And this will bring that rate down to 0.5 or 0.55% for most borrowers. And the average borrower could save nearly $1,400 a year with this decrease. Now let's take a look at last month's housing sales numbers. I'll go over the national numbers real quickly, but I'm not going to spend a ton of time on it as it's widely varied across the country right now. The median list price was $414,950, with new listings rising 6% from last month, but still down nearly 16% from a year ago. Days on market dropped from last month, but continues its overall increasing trend and is currently at 67 days nationally. In Texas, the median sales price was $327,000, with closed sales down 15% from a year ago and active listings up nearly 116%. Days on market continued to rise to 65 days compared to 39 days a year ago. And the months of inventory dropped slightly from last month to 2.6 months currently available. Homes sold at 93.8% of their original list price. In the San Antonio New Braunfels MSA, median sales price was down slightly from last month at $309,000, but up 2.7% from a year ago. And closed sales were down about 16.9%, with active listings up 141.6% compared to a year ago. Days on market also continued to rise in the New Braunfels San Antonio area and is currently at 70 days compared to 39 days a year ago. And our months of inventory held steady at 3.2 months currently available, so still pretty limited inventory around this area. Homes are currently selling at 93.5% of their original list price. So what are some key takeaways from all this information? Well, for one, what you see nationally will be very different from what you see in your local market area, as real estate is highly localized. There will be some markets that see dramatic price decreases, while others may see moderate price gains. In Central Texas, we did see an increase in home sales from last month as we head into the historically busier summer selling season. But uncertainty in the overall economy, housing prices, and mortgage rates have caused many people to sit on the sidelines. But as the economy comes under control and mortgage rates decrease, we could see that pent-up demand rushing back into the market. Combined with the low inventory we have here in Central Texas, and we may see a very hot housing market towards the end of the summer. By the end of the year, I expect homeowners will see a 3 to 4% appreciation in their home values here in the Central Texas area. I hope you found this information valuable. What do you think? What are you seeing in your local area? I'd love to have a discussion with you. Let me know in the comments down below. And if there's anything I can ever do to help you, please feel free to reach out to me. I'm always available to help. Thanks and have a great day.